Welcome everyone. This is Pinnacle Professional College, and today we are going to be learning a lot in public sector accounting. Today we are going to be discussing the key characteristics of public sector accounting in relation to budgeting, execution, accounting, and reporting. So these are the things we are going to discuss. It's going to be a very, very insightful presentation. So please stick and stay with us. So when you move on to the next slide, we'll be talking about key public officers, and we'll be determining the role and responsibilities of these key public officers. In every public sector accounting framework, there are key public officers who are responsible for executing public sector policies. So let's look at the Minister of Finance. The Minister of Finance and what he does. What are his or her responsibilities? It's very, very crucial. So the Minister of Finance, these are a couple of things he does. I outlined them here. He prepares the annual and supplementary budget estimates and reports for submission to Parliament. So the minister is responsible for, preparing these budget estimates and not only leaving it at that, but he reports submission to Parliament. And that's why every year you see an annual budget reading in Parliament. So always remember he or she prepares the budget estimates and reports the submissions to Parliament. So the budget estimate is basically a forecast, a financial forecast of the economy and how the finance minister, based on his or her assumptions, is looking into the future of the economy. Number two is he submits to Parliament for approval the budget of covered entities as required under this act. So he has to submit, the budget to Parliament for approval. Parliament has to approve the budget. So it's very, very key. So preparation of budget, number one, reporting on the budget, number two, and submission for approval of the budget to Parliament. It's very, very key. Very, very key. So just think about it like how an organization runs, right? So when an organization runs and they want to plan ahead and look into the future, they'll usually have budget estimates, right? And the budget estimates tell them what they're expecting for the future. Same with the Minister of Finance. His budget estimates tell him or her what to expect in the future from a financial point of view, right? So he prepares this budget, he reports it to Parliament, and then you submit it for approval. Similar process that goes on in organizations. This is on a larger scale for a country. Now, after he's prepared this budget and submitted it for approval, now he has to come and monitor and assess the implementation of the fiscal policy of government, right? So right now he's put the budget in place. He's implemented some fiscal policies as a result, but he needs to monitor and assess the implementation of the fiscal policy. It's very, very crucial. It's very, very crucial. Please don't forget this. So when we say fiscal policy, what do we mean? Now, fiscal policy has two main categories that you need to look at. When we are talking about fiscal policy, we are looking at taxation and expenditure. Taxation and government expenditure. Taxation and expenditure. Taxation and expenditure. So these are the two arms of fiscal policy that the finance minister will look at managing to ensure the right policy outcomes for the government and for the nation as a whole. So he or she would monitor and assess the implementation of the fiscal policy of government. He or she will also be responsible for managing government property and anything relating to financial assets, government debts, any guarantees, contingent liabilities, etc. For those who are, doing accounting, contingent liabilities, any liability that is essentially contingent on something happening, right? So if that thing happens, then that liability becomes due for payment, basically. So the minister is responsible for all of these things, from government property to financial assets to government debts to government guarantees. He or she would manage all of that. So it's quite a very broad scope that the Minister of Finance looks at. Another thing the minister also looks at is he accounts for public funds, right? At the end of the day, people would have paid their taxes, people would have paid all sorts of monies to the government, and it's very, very responsible to have an accounting mechanism to ensure that monies are spent wisely. So the minister shall ensure the accounting for public funds through what we call a consolidated public account. A consolidated public account. So that's very, very crucial. That's very, very crucial. So maybe you might want to understand what a consolidated public account is. As the name suggests, there are different micro public accounts, and the accounting is done through a consolidated one. So all these minor public accounts come together into a consolidated public account, which is like a big public account, that covers essentially, what was received and what was spent. Now, number 6, supervise the financial operations of a covered entity. So the finance minister also has supervisory roles. He also prepares the fiscal strategy document. Now, we already discussed that when we talk about fiscal policy, we are referring to two things here: taxation and expenditure, how government manages taxation and expenditure, and the implications of it on the economy. So he prepares a fiscal strategy document, which is basically a document on how the minister intends to roll out his fiscal policies into the economy, and what he or she thinks the impact is going to be, how he or she believes the fiscal policy he or she is going to put in place is going to pan out in the economy. So this is a document which enlists the fiscal policies where the minister would like to touch in order to have the right economic outcomes for the country. The finance minister is also responsible for managing public funds. He's responsible for managing public funds. He's also responsible for coordinating and mobilizing resources. Coordinating and mobilizing resources. That's what the finance minister also does. They coordinate and mobilize resources. The finance minister is responsible for things around getting financial assistance from development partners and being able to manage and integrate these resources wisely by planning, budgeting, reporting, and proper accounting, etc. So the finance minister is a coordinator and a mobilizer of resources. And that's why you sometimes see the finance minister go out to go source for resources of financial assistance from all kinds of development agencies. Number 10, the finance minister is also responsible for providing what we call a policy framework. That's a structure, a policy structure for conducting banking. How banking is done. The finance minister provides a policy framework for the management of cash. He or she is very, very integral in this process. The number 11, the finance minister issues directives and instructions necessary for the effective implementation of this act. So there are certain instructions, financial instructions or directives that the finance minister issues, which are very, very important. These directives are important because they determine, the financial outcomes of the country or the economic outcomes of the country. And the finance minister will usually issue these directives to principal account holders and principal spending officers, right? So these directives are very, very important. Let's move on to some more issues surrounding the minister. Right now, we want to establish what the powers of the minister are in relation to Act 291, right? What are the powers of the minister? So pursuant to Section 4, the minister may request a report or any other information from a covered entity or any other person receiving grants, advances, or any other form of financial assistance, right? So the minister has the power to request a report. The minister needs to know what is going on, what he needs. The minister is entitled to financial information. So from any covered entity or any person who is receiving some form of grants or loans or guarantees, etc., the minister needs that report. B, in consultation with the Civil Service Council and with the approval of cabinet, establish structures or units within the ministry necessary to enable the minister discharge responsibilities. So this is basically talking about the establishment of structures and units, because it's these structures and units that's going to aid or facilitate the minister's work. And the minister does not do this alone. He or she does this with the Civil Service Council and cabinet approval. So the establishment of structures and units, very, very important within the ministry, right? C, acting on the advice of the Attorney General and subject to the approval of Parliament, enter into and execute an agreement on behalf of the government in relation to matters of financial nature. So the minister is more of like an in-betweener, sort of a financial representative, if I must say, of some sort, who executes agreements on behalf of government, right? In all matters which are financial in nature, he or she will step in and execute agreements on behalf of government, very, very important. Again, the finance minister does not do this alone. He or she would act on the advice of the Attorney General, and subject to the approval of Parliament, he or she will be able to enter into these agreements and execute them as he or she wills. D, give directives and instructions necessary for the implementation of the provisions of this act. So again, we see directives and instructions here, as we saw earlier. The minister may delegate any of the responsibilities under subsection 1 to the chief director or to a senior public officer not below the rank of a director within the ministry, right? So the minister has delegatory powers. The minister can delegate any of the responsibilities under subsection 1 to either the chief director or to a senior public officer. So the minister can delegate responsibilities. but the minister's ultimate responsibilities shall not be relieved. The minister can delegate, but his or her ultimate responsibilities remain with him or her. It's very crucial. Very crucial. So you can delegate, and look at the people the minister can delegate to: the chief director or to a senior public officer. And a senior public officer who is not below the rank of a director. It's very, very key. Very, very key. So the minister has delegatory powers. Number 3, subject to any procurement laws, the minister may hire or retain the services of professional consultants or experts as the minister considers necessary, right? So the minister can basically hire or retain the services of professionals, consultants. The minister has the power to do that, especially when it facilitates the performance of the functions of the minister. The minister can solicit for the services of professionals, consultants, or experts in that regard, subject to any procurement laws. Subject to any procurement laws. Because the procurement laws will define the hiring or basically the procurement of those services. So subject to any procurement laws, the minister is able to hire or retain the services of professionals and consultants. Now, in our earlier discussion, we talked about the chief director. So let's try to find out what the responsibilities of the chief director are. What are his or her responsibilities of the chief director? In addition to the duties assigned under Section 20 of the Civil Service Act, right, 1993, and responsibilities specified under this act, the chief director shall, number 1, the first thing you must think of the chief director is he or she would have an advisory role. So the chief director shall advise the minister on economic, budgetary, and financial matters. Very, very important. So the chief director has an advisory role. In our previous slide, we saw the chief director. In number 2, you would see that we said that the minister can delegate to the chief director. Right? And we realize here that the chief director has an advisory role to advise the minister on economic matters. And for this reason, the chief director shall, through the controller and accountant general, have access during working hours to the accounting records, right? The chief director would have access to the accounting records, to the place where the public accounting services are carried out, the place where the accounting records are kept, and may inspect the offices of a covered entity and assess any information relating to public finance, right? Because of this advisory role, the chief director should have access to the accounting records, the place where the accounting services are provided, the place, right? And the place where the accounting records are also kept, the chief director should have access. The chief director should be able to inspect the offices of a covered entity and access any information. So the chief director here has a right to financial or accounting information. It's very, very crucial. Number 2, the chief director is also responsible for coordinating the preparation of the fiscal strategy document. We already talked about the fiscal strategy document. We said it's a document that essentially covers taxation and expenditure and discusses or outlines the fiscal strategy or policy of the minister. The chief director will also coordinate the preparation of the budget estimates budget estimates. And the chief director also coordinates the preparation of the appropriation bill. So these are 3 things that the chief director does. Number 3, the chief director also coordinates the promotion and enforcement of a transparent, efficient and effective management of things like public revenue, expenditure, and the assets and liabilities of a covered entity. So the chief director is responsible for ensuring that, revenue, expenditure, assets, and liabilities are managed in a very efficient and effective manner. So what does the chief director do in summary? An advisory role, a coordination/preparation role, as well as a management role, which is in relation to the management of revenue, expenditure, and assets and liabilities. So let's look at some more responsibilities of the chief director. The chief director is also responsible for monitoring the performance of the public financial management systems, monitoring the performance of the public financial management system. So they have a monitoring role here. They need to monitor the financial management systems and, basically see whether it's working on track. They also monitor the financial and related performance of a covered entity. They also monitor financial performance. 6, they prepare reports within 1 month after the end of each quarter on the implementation of the annual budget by the government and submit the report to the minister. They prepare a report within 1 month after the end of each quarter on the implementation of the annual budget by the government and submit the report to the minister. Right, so the chief director here would prepare reports. At the end of each quarter, they prepare this report, which should be done within a month, on how the annual budget is being implemented. And that report is very, very crucial, because after you prepare a budget and you set out your estimates, as you go through the year, you would want to know how well you are implementing what you said you implement in the budget, right? So the chief director is responsible for preparing this report and submitting this report to the minister. Very, very crucial. Number 7, the chief director may, under paragraph B of subsection 2, authorize a public officer to inspect the offices of a covered entity. So the chief director has the power to authorize a public officer to inspect the offices of a covered entity, right? Any entity that the minister has purview over in terms of financial matters or financial issues. Number 8, the chief director may in writing delegate any of the responsibilities under this section to a senior public officer of the ministry, but shall not be relieved of the ultimate responsibility for the discharge of the delegated responsibilities. So the chief director also has delegatory powers, just like the minister of finance. So the chief director can delegate responsibilities to a senior public officer. They have the power to do that, but they will not be relieved of the ultimate responsibility for the discharge of that delegated responsibility. So the ultimate responsibility still lies on them, but they do have the power to delegate. They do have the power to delegate. So we are still looking at the role and responsibilities of key public officers, right? Key public officers. Now let's move on to the duties of a principal spending officer. The duties of a principal spending officer. A principal spending officer of a covered entity shall ensure the following. So ensure the regularity and proper use of money appropriated in that covered entity, right? So the duties of a principal spending officer, right? The name suggests or gives meaning as to what they do. He or she would ensure the proper use of money because they are a spending officer, right? B, authorize commitments for the covered entity within a ceiling set by the minister. So they also authorize commitments, pending commitments for covered entities. They also manage the resources received, held, or disposed of by or on account of the covered entity. So they also have a management prerogative here. So they ensure the proper use of money, they authorize commitments, and they manage resources. Number 2, a principal spending officer shall, in the exercise of duties under this act, establish an effective system of risk management, internal control, and internal audit. It's very key. It's very, very key. A principal spending officer shall, in the exercise of duties under this act, establish an effective system of risk management. They shall establish an effective system of risk management. So the principal spending officer or the PSO puts in place internal control and internal audit measures just to ensure that risk are managed properly, right? Just like any organization where there's an internal audit function or internal controls are put in place to ensure that processes are watertight. Number 3, where a principal spending officer receives a subvention on behalf of another entity, that principal spending officer shall remit the subvention to that other entity in accordance with the approved cash flow plan for the subvention. So when a PSO receives some form of money on behalf of another entity, that principal spending officer shall remit or send the subvention to the other entity in accordance with the cash flow plan. Number 4, a principal spending officer may delegate a function or responsibility specified in this act to a public officer who is under the control of that principal spending officer, but shall not be relieved of the ultimate responsibility. So again, we see that just like the minister and the chief director had delegatory powers, the principal spending officer also has the ability to delegate. So the principal spending officer can delegate some form of task or responsibilities to a public officer who is under the control of the principal spending officer. But again, they are not relieved of their ultimate responsibility. Number 5, where a principal spending officer delegates a function or responsibility under subsection 4, that principal spending officer shall give the directives necessary. So again, we see the issuance of directives here, or the proper exercise or performance of that function or responsibility. Very, very key. Very, very important. Another important thing that we need to talk about here is the controller and accountant general. The controller and accountant general. Let's talk about how they are appointed and some responsibilities that they perform. Okay, so the president, let's talk about appointment. The president shall, in accordance with Article 195 of the Constitution, appoint a controller and accountant general, who shall be what we call the chief accounting officer, CAO, of the government, and chief advisor to the minister and government in matters relating to accountancy. So the controller and accountant general is basically the accountant of the government. They are the accountants of the government. So the president appoints the Controller and Accountant General in accordance with Article 195 of the Constitution. So the President appoints this person. The terms and conditions of service of a Controller and Accountant General shall be specified in the letter of appointment, and shall be appointed for a term of 4 years, which may be renewed. It's very, very crucial. So the Controller and Accountant General is appointed and for a term of 4 years, which may be renewed. Now let's talk about some responsibilities. Number one, the Controller and Accountant General shall be responsible to the Minister for the custody, safety, and integrity of public funds. So this individual would be responsible to the Minister for issues surrounding the integrity and the custody of public funds. And therefore, the Controller and Accountant General will compile and manage the accounts prepared. They will compile and manage the accounts prepared in relation to public funds. They will compile and manage the accounts prepared. So you can see that this person is literally an accountant. Basically, what an accountant will do for an organization, the Controller and Accountant General is doing that for the government. Issue general instructions to a principal spending officer in accordance with this act. So they can also issue general instructions to a principal spending officer. They keep, render, and publish statements, financial statements on public accounts. They also publish financial statements. They develop efficient accounting systems. So typically what an accountant will do, right? They also approve accounting instructions of a covered entity. They receive, disburse, and provide secure custody for public funds. So custody for public funds is very, very crucial. So they also do that as well. They also receive, disburse, and provide secure custody for public funds. Number 7, on the instructions of the Minister, open an account with the Bank of Ghana and its agent necessary for the deposits of public funds subject to compliance with the Treasury Single Account System established under Section 46. All right. So they open an account with the Bank of Ghana, and this account is supposed to host or house the deposits of public funds. And they do this on the instructions of the Minister. Number 8, they also authorize the opening of an account for a covered entity. Number 9, in consultation with the Auditor General, the accounting standards, policies, and the classification system to be applied in public accounting to ensure that a proper system of accounting operates. So they are also responsible for ensuring that there's an efficient and effective accounting system that's in place, because the accounting system is crucial to determine the numbers that are even churned out and to ensure that proper custody and integrity of public funds is maintained. Number 10, they also provide accounting officers to covered entities. They are also responsible for the management of the books. Okay. Now we've talked about the Controller and Accountant General. Now let's talk about his or her deputy, the Deputy Controller and Accountant General. the Deputy Controller and Accountant General. Now, who is this individual? Who is this individual? Let's find out. The President shall, in accordance with Article 195 of the Constitution, appoint a Controller and Accountant General who shall be the Chief Accounting Officer of the government and the Chief Advisor to the Minister of Government. Again, the terms and conditions of the service of the Controller and Accountant General shall be specified in the letter of appointment. It's very, very important. So let's talk about the Deputy Controller and Accountant General here. I think what we discussed was in relation to the Controller and Accountant General. The Deputy Controller also goes to a similar process. The President also appoints Deputy Controllers and Accountant General. The Deputy Controller and Accountant General is the President that appoints this person, and the Deputy Controller and Accountant General shall perform functions assigned by the Controller and Accountant General, because the Controller and Accountant General is literally the boss of the deputy. I hope that makes sense. Okay, so now we are going to zoom into a different topic. Now let's talk a little bit about government revenue, expenditure, assets, and liabilities. Government revenue, expenditure, assets, and liabilities. So how is revenue defined? So revenue is basically defined as gross economic inflows. Now let's read this long definition. Revenue comprises gross inflows of economic benefits or service potential received and receivable by the reporting entity, which represents an increase in net assets other than increases relating to contributions from owners. So revenue are basically gross inflows. Money's coming in generally on a general basis. That's revenue. If you want a very simple definition of that. Now, why does the government need revenue? This sounds like a rhetorical question, but let's delve into it to understand why government needs revenue. Why does the government need revenue? Government has a lot of responsibilities towards the public, and where there are responsibilities, resources are also required. Among these are to provide and deliver public goods and services. They must also pay compensation to public sector workers. It's very, very important. They pay compensation to public sector workers. So anybody who works for the government needs resources to be able to pay these people. They also need resources to service debts, to pay for debts. They also need resources to fight poverty by providing social benefits, right? They also need resources to provide grants and subsidies for consumption. They also need resources to expand the economy as well as make investments to provide jobs. So the government needs revenue for different kinds of reasons, for some of which I've stated. Now, what are the sources of government revenue? Number one is through the central government. That's one source. Through the MDAs, through subvented entities, through MMDAs and GBs. These are all sources of government revenue. How does the channels through which the government is able to amass revenue? The GBs, the MMDAs, the subvented entities, the MDAs, and the central government itself. So what are the sources of central government revenue? We describe the central government as a source of revenue. What are the What are the sources of central government revenue? The main sources of revenue and receipts to the central government are: number one, tax revenues, non-tax revenues, grants, borrowings, and trust monies. These are sources, right? You have taxes, grants, borrowings, and trust monies. Very, very important. Now let's talk about tax revenues. Tax revenues. There's a saying that two things are certain in life: taxes and debt. Taxes. So tax revenues. Taxes are compulsory levy imposed on the people of a country by a legitimate body or person. So taxes are basically a levy that are charged on people of the country. In Ghana, only Parliament can approve the imposition of taxes on the people of Ghana. It's only the Parliament that can approve the imposition of taxes. So why government taxes? Why does the government tax? To raise revenue. To raise revenue, basically. So the reasons for taxation include raise money for public administration and development. They also tax to allocate and redistribute wealth, right? So that's also another reason why taxes are used. If you want to redistribute wealth, you can use taxation as a fiscal tool, as fiscal and economic policy tool to confront inflation. So you can also use taxation to do that, to confront inflation, to protect infant industries by imposing high taxes on import duties of competitive goods. So you can also use taxation to protect your industry, right? So it has a protective effect. So you tax very high on import duties in order to protect small industries and small businesses that are beginning to find their feet in the economy. To control consumption behaviors relating to certain goods, for example, cigarettes, rubber bags. Taxation is intended to do that. 6, as an anti-dumping tool. Anti-dumping tool, very, very crucial. So these are some reasons why we tax. And you might want to know what dumping is. So dumping refers to the practice of firms selling products abroad at significantly low prices compared to what is actually sold in their home market. So you're basically dumping your product in another economy by charging very, very low for it. And the intention is by charging low is to get people to, switch onto your product, and it can hurt the local industry. So what government does is to intervene by using taxation as an anti-dumping tool. It's an anti-dumping tool. Very, very key. Very, very key. Now let's talk about government revenue. So we are continuing our discussion. Now let's look at the classification of taxes. The taxes imposed may either be direct taxes or indirect taxes, domestic taxes or international, progressive or regressive. And these are the basic classification of taxes that we are looking at. Right? So let's look at direct tax. These are taxes imposed on income, capital gains, and gifts. These are taxes imposed on income, capital gains, and gifts, right? Very, very key. So any taxes that are imposed on income, whether it be income itself, capital gains and gifts. That's a direct tax. The tax burden is associated with these taxes falls on the taxpayer. So the tax burden falls directly on the taxpayer. An example of direct taxes are personal income tax, which is what we call pay as you earn, paid on employment income. So the taxes that are charged on your income, that's a direct tax. Corporate taxes, that is paid by companies. Rent tax, that's paid by landlords. Dividend tax, that's paid by shareholders. Vehicle income tax, that is paid by transport owners. Stamp tax is paid by people in small businesses. All right, very, very crucial. So we have personal income tax, we have the corporate taxes, we have the rent tax, we have the dividend tax, we have vehicle income tax and stamp taxes. These are direct taxes. So direct taxes are imposed on income. Indirect taxes are imposed on goods and services. The tax burden falls on the final consumers in the form of higher prices, right? Higher prices. So in the case of direct tax, the tax burden falls on, the taxpayer. The indirect taxes. For indirect taxes, the tax burden falls on the final consumer. Examples include value-added tax. VAT is an indirect tax. Communication service tax. Custom duties on international trade. Petroleum taxes on petroleum products. Excise duties imposed on certain locally manufactured goods such as polythene bags, etc., beer, and co. So indirect taxes are imposed on goods and services. Okay, now let's talk about domestic and international taxes. Domestic and international taxes. Domestic taxes are those taxes that are imposed on local goods and services and incomes derived from Ghana. So they are domestic in nature. The scope is domestic. Examples include pay as you earn, corporate taxes, VAT, fuel taxes, communication service taxes. So what are international taxes? These are obtained from custom duties, including the VAT on imported and exported goods. So this is international in scope. Domestic taxes, we are looking at the imposition of taxes on local goods. International taxes, we are looking at the imposition of taxes on imported and exported goods, international in scope. Now let's talk about progressive and regressive taxes. A progressive tax is defined as a tax whose rate increases as the payer's income increases. That's progressive. So as your income goes high, your tax goes high. So it's progressive. That is, individuals who earn high incomes have a greater proportion of their incomes taken to pay the tax. Now, what is a regressive tax? A regressive tax will be the opposite. It's one whose rate increases as the payer's income decreases. So it's regressive in nature. It's regressive in nature. It's one whose rate increases as the payer's income decreases. So that's the difference, right? Now, let's talk about collection of tax revenues, because it's not enough to impose taxes. You must find a way of collecting those taxes. In recent past, 3 state institutions were responsible for collecting tax revenues, and these were the IRS, the Internal Revenue Service, the VAT Service, and SEPS. In an attempt to improve tax administration, a single institution called Ghana Revenue Authority, so that's how the GRA came about, was established in 2009 by the Ghana Revenue Authority Act. All right. This is achieved by merging the 3 existing collecting agencies into one. So it's merged the IRS, the VAT Service, and the SEPS into one institution to ensure efficiency in collecting tax revenues. Okay. Now let's talk about the divisions of the Ghana Revenue Authority. Now the GRA has three divisions. The GRA has three divisions. Number one, the domestic tax division, which is relates to VAT and IRS, the VAT service and IRS. We have the custom division, which relates to SEPS, custom excise and preventive services, and support services division, the support services division. So these are the three divisions. You have the domestic side, you have the custom side, you have the support side, right? What are the objects of establishing the GRA or the Ghana Revenue Authority? What are the objects of establishing the GRA? Number one is to provide a holistic approach to tax and customs administration, right? Because you would want, one organization to be in charge of managing and collecting tax revenue. So it provides a holistic approach to tax and customs administration. Number two, reduce administrative and tax compliance costs and provide better services, right? So reduce administrative costs and provide better service to taxpayers. You'd want to serve taxpayers well. Number three, promote efficient collection of revenue. So that's another objective of the GRA, to promote the efficient collection of revenue and the equitable distribution of the tax burden, right? So the tax burden must be distributed equitably in a fair manner. So that's number three. Number four is ensure greater accountability to government for the professional management of tax administration, right? So it's also, another objective is to ensure accountability, all right? The GRA, as we said, is the merging of the IRS, the VAT service, as well as SEPS, which is the Custom Excise and Preventive Services, into one institution that will be responsible for managing and collecting tax revenues, And this helps to ensure greater accountability. Now, what are the functions of the GRA, the Ghana Revenue Authority? Number one is to assess and collect taxes. You cannot collect taxes without assessing it. What is the tax payable, right, for each person or institution? Then you can go ahead to collect those taxes. So assess and collect taxes, interest and penalties on taxes due to the Republic with optimum efficiency. So they are responsible for the assessment and collection of taxes. They are also responsible for the payments of the amount collected into the consolidated fund. They pay these amounts into the consolidated fund. They also promote tax compliance and tax education to ensure that people comply with the tax laws. Number four, they combat tax fraud and evasion and cooperate to that effect with other competent law enforcement agencies. They combat tax fraud. Number five, they advise district assemblies on the assessment and collection of their revenue. So anything with regards to tax management, tax collection, and tax administration is within the purview of the Ghana Revenue Authority. They also prepare and publish reports and statistics related to its revenue collection. They make, reporting is key, right? So they publish reports, they prepare reports related to revenue collection. They make recommendations to the minister on revenue collection policies, right? On how best to collect revenue. They make these recommendations to the minister. They perform any other function in relation to revenue as directed by the minister or assigned to it under any enactment, right? They perform other functions as well. So we can safely say that the functions of the GRA are in relation to the assessment, taxes, collection of taxes, administration of taxes, and ensuring that these taxes are reported appropriately and published for transparency purposes. Now, so today, this is where we'll stop. This is where we'll stop for today. We'll be delving more into government revenue expenditure, assets, and liabilities. I hope you like this lecture. Kindly subscribe to the channel if you already haven't. And on a daily basis, or each and every other day, I'll be posting videos. If you have any questions, you can leave it in the comment section and we will definitely respond. Thank you and have a good day.